Yeah, hi friends. Welcome back to Digital Fifth Knowledge Sessions. So this sessions again we have done the previous session on the same topic, which is on the IT outsourcing guidelines, which has been released by the RBI, encompassing all the regulated entities to adhere to, right? Which came somewhere around April 23. Before that, it has that draft release somewhere in September. Now it has come as a master direction. In this session, I'm not going to too much deep into that. What is actually the guidelines requirement? I'll touch upon it, but more importantly, I'm more focusing on how the REs, regulated entities, bank, NBFCs should follow to comply with their regulations. So that's where that my focus will be for this webinar. So it should help you if you are in a certain position, that how it can, what are the things that you need to take care as a REs, regulated entities. So that will continue. So let me just get started. But prior to that, my quick introduction. So I'm Shashank Shekhar. I take care of the consulting. At the Digital Fifth, I've been working with the L&T, Infotech, and Wipro is more into the cybersecurity, IT governance, and the compliance space, advisory space in the technology services. Then I moved to DCB Bank, where that I had a privilege to manage that IT governance, then also the infrastructure, the data center, then internet banking, entire the digital banking, open banking, and that's where that I exposed to the managing these contracts very closely. That's where that my experience, be it on the ATM management, be it on the any partner management or the any data center management, I saw that and build those contracts on myself. So that's where that and experience of the compliance adding to both. So that's always gives me an added advantage of to looking at both the angles, right? Quick introduction about the firm. Most of you maybe earlier attended our seminar and you may be knowing that, but just for those who are not been there and not have known us. So Digital Fifth, we are a digital and fintech consulting firm. We primarily work into the BFSI space, into the digitals, working with the banks, fintechs, NBFCs, and also lots of the embedded finance players. What do we do? The primarily we through the consulting where we work on the various different problem statement of the customers into that digital space. That's where we help them. As a part of the consulting, also we help our customers to reach out to various partners, be it on the solution side or be it on the any kind of the requirements that will may they have there. We'll help with the partnership. They're also helping them the hiring. And we do lots of the B2B training on the similar topics, be it on the compliance, digital banking, digital lending, technologies, new digital transformations, buzzword, whatever happened that we do at the training around that. This is a snapshot for our customers been there who have supported us during our 6 years of journey. Our network has been our strength that we ride on that. So where that 6,000 followership, we cross the LinkedIn and various platforms, 20,000 plus emailer list, and that's all that influence details are there. On the consulting services, if you look at the, we work on the digital advisory, that where we work with the banks, NBFCs, or anybody, especially the regulated entity, helping into the building the digital maturity model, benchmarking, building the digital strategy and the roadmap for that, or completely digitizing the journey which you may have, which could be manual, partial digital. We help them into do that. And also we do our program management for various digital transformation, be you are implementing a omni-channel platform or you are trying to upgrade your core banking or replacing the core banking or deploying any kind of the digital transformation program. We help them to manage those programs. Then open banking advisory related to any activities, any assignment with respect to open banking, be it on study, be it on the benchmarking, be it into the building the bank and fintech partnership model for you. Then we work lots with the fintech and startup into the different services, be it on the GTM, product development, product management, and the relationship. We do lots of work on the security and compliance. So for example, for this guidelines itself, we are right now working with a couple of banks where that we are into the process to help them to comply with. And in case if anybody has a requirement, you may just reach out to us. So let's get into the topic, guys. So RBI Master Direction, I already told that it came into February, September as a draft last year. Now it has come as the Master Directions. So far, IT outsourcing has always been covered as a part of the Gopal Krishnan Committee guidelines, which was comprehensively overall IT governance and technology management, right? And it was outsourcing was a part of it. So that's where that, but now as the dependency is increasing on the technologies and the criticality of the outsourcing engagement is very high, RBI thought to bring that completely in a separate guidelines for the banks to focus, banks and all the regulated entities, right? Now the direction will come into effect from 1st of October 23. Different guidelines have been maintained, like say, for example, any contract which is getting renewed before that, or you're getting into the agreement before that, you need to comply within the next 6 months after that circular going live, right? Circular is coming into effect by 1st of October. It means that from now till April, you have an opportunity to get that every control in place. And anything going beyond that 31st of October, then you have a different timelines, right? It's covered on 10 different domains, and I'll just talk about some of the things. Very importantly, the first time, I think my understanding, I may be wrong, but my understanding is that very critically, the first time RBI has come as a very clear guidelines that when you are going for the cloud, what are the things that you need to take care of it? Because cloud is, again, it's a kind of the outsourcing arrangement for the banks for the various component, like be it on the infrastructure, be it on the software management. So there is a clear guidelines that you need to take care of it. It means that it gives you a quite comfort that you may now go ahead with the cloud strategy, but making sure that you are taking care of some of the controls. The question becomes like why this has come up now as a pure play as an outsourcing. So one is definitely I was talking about the technology adoption and complexity is increasing within the organizations. Like it's not remain the same as it was there 5 or 6 years back. Lots of more digital transformation, digital activities are taking place. I think industry has also seen some of the notable migration related challenges, right? Where that banks has outsourced certain services to the third party, and then during that delivery of the third party services, be it on the performance management, be it on the compliance related, also the issues have been seen when they try to migrate. So that's where that RBI would have thought that let's have a very strong guidelines around that. Lots of the newest players are coming in, the platform services are coming. Classic is the cloud providers are coming, in the core banking, in any kind of the like loan management system or the loan origination system. 10 years back, if you look at it, you might have that 5 or 6 players only, but today you have like 50 plus players will be there, and they are working in the different capacity with the banks. So those are the typical scenarios are emerging. Lots of the platform as a service players, like be it on the credit card as a service, be it on a payment as a service, be it on the banking as a service kind of players are emerging. Lots of the outsourcing opportunity for bank across the service line. Banks is trying to non-critical or maybe the critical, but they maybe heavy resource intensive kind of thing. They may be outsourcing. Continue to focus on the operational resilience. RBI doesn't want, because as we are moving in the digital era, bank can't afford or any REs can't afford to have a kind of the downtimes kind of structure. And when their dependency is high on the outsourcing, RBI is trying to extend that kind of the resilience to the partners level also. And definitely increased dependence on the customer digital channels, like customer expect that 24/7 kind of arrangements. Customer may want to do a transaction midnight, may want to open an account in the midnight kind of the things. That's where that your platform should be as well and resilience into that. And the cloud adoptions, right? And guys, sorry, so I missed out to tell. So if anybody has a questions, please raise your hand or put up a question in the question box. I'll time to time I'll keep on taking break and address those questions. So what are the challenges ahead for now? This compliance guidelines is coming, and what are the challenges brings to the technology teams and the compliance team within the organizations, and especially the CISO, because most of the CISO is also driving that initiative. So one is definitely there will be increase in regulatory scrutiny, right? Now the guidelines are there. They will try to look at it more deeply that how your outsourcing is managed, right? You will need to manage a kind of the balancing act between the delivery and the risk management. So you have to outsource, but at the same time, you'll have to take care of the lots of the risk. How you're going to balance it out, that's where it's going to be really challenging. Then, as is a compliance, you will have lots of more regular audit, continue to do the risk assessment, continue to look at the third-party audits. So that increase efforts into the managing the compliance. Need to reevaluate each of the arrangements. So you need to go back, look at that all the 10, 15, 20, whatever the outsourcing arrangement you would have on a different kind of the things based on the materiality. You need to look at it. You may need to reevaluate the arrangement and rebuild the control structure for them. Skill set, another major challenge, because it's not easy to understand these contractual arrangements. Like, say, for example, if you have outsourced your switch management and the card management, what are the challenges it brings? And then applying those compliance, it may not have the right skills available to manage those things. So those are the typical challenges will be foreseen. And organizations can't stop the digital transformation. So, well, they're going to head with the digital transformation. More and more initiative will come, more and more outsourcing will be done, more of the technology dependency will be there, and you need to manage the compliance. Impact definitely it brings a larger impact on the banks because banks are the typically heavy investor spender on the technologies as well as the outsourcing. So there will be a deeper focus and scrutiny. You need to go back and strengthen your entire framework because most of the things, as I was talking about, Gopal Krishnan committee has already laid down the certain guidelines and bank has been following with them. But it's now further getting extended to that support level. So you may need to go back your risk management, your evaluation framework, your security framework, everything need to be tightened further. And then you need to reevaluate or reinitiate your cloud approach, the strategy, handholding. Banks may require to handle the newest players. So they may not have an understanding of that, how the control structure works. So you may be partnering for them to provide you certain services, but you may need to help them to get compliance also. Larger impact will be on the small finance bank and the payments bank because they may not have that structure built into the duration. So they may need to start scratch at many a times. They may not have the right kind of the policy, right kind of the risk management framework and all these things. So you may have to start it from the scratch. And they have been deploying lots of the outsourcing so that they can focus on their core business. The same story goes with the NBFCs, the credit information bureaus, the urban cooperative, and these are the entities have been brought under the regulations. So if you look at the Gopal Krishnan committee, which was released in 2001, it specified that it has to be applied to the banks, but now it has been banks, NBFCs, small finance banks, CICs, UCBs, everybody. And also not only the impact will be to the regulated entities, but all those guys who are providing the services, and it becomes more pertinent for them to go and build those control structure and go back and tell the REs and give the comfort that we have that kind of the setup, which helps you to comply with those kind of guidelines, which is expected from that regulations, right? I see one question. Uprant Sharma is asking, somebody was saying to me that RBI suggested to store the call recording and related data is on premise. Is that correct? Uprant, I think this question pertains to the VCIP, video CIP, I presume so, where that new guidelines has come recently, where that RBI has specified that video KYC will be performed from the cloud, but as soon as the video KYC get completed and account get opened, those recordings or the video recordings has to be moved into the on-premise. So that's there, yes, correct. If your question is with respect to video CIP's customer process, acquisition process, that the KYC is there. So if that's there, I think this is correct. Okay, so again, I'll continue to tell that please keep on raising the question in the question answer session, or you may raise your hand and then we'll get the questions. I think goals to achieve are very simple. You need to build in a right compliance framework, understand your gaps. So you look at the controls like 20 pages, 100 plus controls which have been defined. Look at that what you are following, at what level is that you are following. Figure it out the gaps, missing point, and not only the policy level but also at the contracts level. Look at the gaps, find out the mechanism, how do you going to comply, rebuild your policy or build it, so outsourcing policy fresh, right? Some of the places that I'm working, there's no outsourcing policy, so we need to write it out outsourcing policy. Banks may have an outsourcing policy at the organization level, but here that you need to build your IT outsourcing policy separately and get it approved from the board. So you need to rebuild or build it from scratch and continue to improve the governance framework. These are the domains which have been specified, like preliminaries, which more like an introduction, but second is more role of regulated entity, building that entire governance. And I'll talk about some of the key expectations from these controls. And then also I'll touch upon that what are the REs are expected to do that, what are the compliance checks that you need to be cognizant of. Evaluation and engagement of service provider, outsourcing, agreement part of the risk management, monitoring. So I'm just not touching here. I'll just continue when I move to the subsequent slides. So as I was talking about that earlier regulation, if you look at it, it was very specifically defined to commercial, critical commercial bank, be it on the private sector, public sector, small, large banks. But now it has been extended to the large segment of the regulated entities, be it on the small finance bank, payment bank, local areas, NBFCs in the top, upper and middle layer, which also constitute a huge number. foreign banks. And for these players, it may be very difficult to figure it out and then build the control framework because they may not have exposed to that kind of the regulatory structure earlier for managing the technologies. So that's where that you may need to look at very deeply that how you're going to adhere to those kinds of things. It's not going to be easy, right? Very clearly, also it has specified that what is applicable, what is not applicable. And also it's not in a very clean slate, right? That you can pick it up any line items that what you have outsourced, whether it falls into outsource or non-outsource, you will still have to look at it in the context of the guidelines, right? So these are the elements like infrastructure management. So most of the things, if you look at it, which are monitoring and management kind of the activities which are there, typically fall into that applicability. While non-applicability, which are like one-time kind of activities or very different kind of the nature or has a business element to it, like say corporate internet banking services. Like if any NBFC is using corporate internet banking of any bank, for example, then it may not fall. Audit services, you do an audit one time or do the VAPT one time, SMS service provider, procuring hardware and software. OEM, if managing the maintenance, means the Microsoft continuously releasing the patches. So Microsoft may not fall into that kind of arrangement. But if you have deployed any set of the resources from the partner to manage your any applications and continuously making any kind of the development, that will fall. But anything which is directly driven through the OEMs may not be there because OEMs will keep on releasing the patches, be it on the system software, be it on the application software. And any kind of the banking correspondent or fintech partnership kind of thing or data enablers like partnering with the Karza or the Portfolios kind of the arrangement is currently being not taken as a part of the IT outsourcing. It has to be treated as a part of the financial services outsourcing, which already in the actions circular is in the implementations, right? So that's where they're. So before I go into the controls, what are the approach that you need to follow? If you are an RE, if you are in a position that you need to have a responsibility to go back and manage that compliance and adherence, what do you need to do? That first, definitely you need to understand that where do you stand with respect to the compliance expectations, right? So look at the control maps for the applicability because everything may not apply. It also depends upon that what are the things that you have outsourced. It could be possible that you may not have any things which is of a material nature, right? So you need to define the materiality, understand that all the contract, and based on that, you try to look at that what are things may apply to you. And then look at the gaps at the structure level. When I say structure level, it means that what kind of policy, governance, roles and responsibilities are been defined. And then at the operational level, in terms of that, all the contracts which has been done and which is in place, go back and check that, okay, those guidelines are being adhered into those contracts. Like, for example, evaluations, due diligence, have the proper due diligence been done earlier? Are the contracts covering all the agreements requirement which has been defined in the guidelines? Are the risks identified as per that guidelines for each of the contract? Is there proper risk arrangement? What kind of the monitoring that you are doing? So do a gap assessment. So procedure contractual recommend and then build the recommendations, define those recommendations and go about the implementation. Sorry. Then you go about the building the control framework, like define your governance structure, roles and responsibilities for board, for technology teams, for every stakeholder. Build a completely outsourcing policy, BCP, RDR framework, and all this thing, and go about the implementations. Right, how so they typically identify gaps, build a control framework, and then go about implementations. So if you look at the now, I'll just talk about that each of the elements which I've been talking about, that control chapter which has been defined, what are the guidelines are there and what are the expectations, right? So if you look at, I've defined that all of the slides in the full quadrant, right? So requirement, what guidelines expects you to do, what should be your action plan, right? What are you expecting as an outcome at the end of that that's compliance structure that you will be doing that? And what are the pointers that you need to check to ensure that, okay, you are complying or not complying, especially for your management or the board to showcase that, okay, we have in these things in place. So for example, the governance framework, it asks for the IT outsourcing policy. It asks you to define a proper roles and responsibilities for the board, for the outsourcing of IT services, for your senior management, what they are expected, what they are supposed to do, for the management of the IT outsourcing, and your CIO, CTO day-to-day responsibility with respect to managing the contracts, and having a proper oversight and assurance mechanism. It means that they expect you to continuously keep on reporting to your senior management, Then your board, that how your contracts are performing and are they performing in line with the guidelines, right? And then also it respects to the maintenance of inventory, very standard requirement, right? So what you gonna be your action plan? Like go back and align your IT policy, outsourcing policy. If not there, then go and define and build IT process policy, and it gives you a very clear indication that what are the things, but it may not be as straight as possible. They're looking as and then build the policy. That's where people like us come into the place to help you to write those IT outsourcing policy and help you to build the compliance framework for that, right? Identify key stakeholders, define their roles and responsibilities in terms of the terms of reference, develop the procedures. Now, policies are typically the mandates, but how are you going to implement those mandates where that you need to build a standard operating procedure, which can be go and taken as an implementation. Build a review and monitoring mechanism, develop inventory, right? So these are your action plan, and outcome is very clearly outsourcing policy, which will also define that how what should be your criteria to outsource anything, right? Which depends on, like, say, for example, was there a genuine need? Was there any cost benefit analysis? Was there a proper evaluation being done? So those are the criteria. Materiality differentiation. So these are the things will come as an outcome, like clear representation of roles and responsibilities. So very clearly documented what are the roles and responsibilities. And the checkpoint. So you need to have the board minutes of meeting, which will tell you about that IT outsourcing policy presented, discussed, and approved, right? IT strategy committee minutes that you need to look at it, create a schedule. So you need to have a kind of the calendar that how you're going to do the reviews, stakeholder meetings. So these are the typically checkpoint. And when RBI comes for the audit, these are the things which will come here for a handy to show a compliance with respect to the circulation, especially the pointers which has been mentioned in the governance framework. I'll take a pause here and I'll see if any other questions are there, or if anybody has a question, you might want to raise your hand and ask the questions. Very happy to pick it up. Okay, if not, I'll continue, but continue to request. If you have a question, put in the Q&A sections or raise your hand. Second is evaluation and engagement of the service provider. So what it expect you that there has to be a proper risk-based due diligence framework. So everything which you are outsourcing, there is a risk attached to it. So you need to have a good understanding of the risk that what you are getting into of outsourcing the same, and build your due diligence, the evaluation mechanism with respect to that, right? To assess the capability and impact of the service provider. Build in a very clearly evaluation matrix that be it on the quality, be it on the performance, be it on the capabilities, technical, financial, operational, all kind of the aspect that you need to touch upon, and which already I defined it. And then you build on an action plan for REs. So what do you need to do? First, define that materiality assessment framework, which already have given a criteria in the policy, right? Now here you are defining that materiality assessment and go and apply to all the contract, and based on that parameter, like, say, for example, what could be the financial impact, what could be the reputational impact, what could be the operational impact. Those are the elements that we use to define the materiality, right? Develop due diligence checklist. So now you are building up the checklist that how you're going to go perform the due diligence, as well as the build that completely evaluation parameters, right? Because many times it will be expected that have you looked at the 2 or 3 partner, because outsourcing are not in a short or the low cost kind of the activities, typically heavy cost element, much complex. So definitely you need to have the mechanism that you have looked at the 2 to 3 vendors, right? That's very important. Now, outcomes is definitely a very clear defined framework that you will have for evaluation of the vendors, and also how you're going to continue to improve upon the services. Checklist again, all these things approved due diligence checklist. You have applied material. So previous slide we have looked at the vendor inventory. Now, so in the vendor inventory, now you will need to have the materiality defined, that high material, low material, or non-material or material kind of things that you will define. And there is a due diligence report for each of the vendors. So these are the like checklist point, and that's where that RBI will come for the audit, look at the vendor inventory, and we'll ask that, okay, is this a material vendor? Yes. Show me the due diligence report, show me the evaluation report, show me the contract, and show me that how you are adhering to those things. So that's where these are the checkpoints that you need to look for the compliance purpose. Okay, so picking up the questions, very interesting question, Nishant. How IT companies like TCS or Infosys will be helping their client into doing this? Do these companies need to understand on this? Absolutely, they need to look at it. Not be it on the TCS, Infosys, or any of the partners falling into that kind of categories for providing that ongoing services to technology services to the banks, be it on the maintenance of the devices, maintenance of the applications, running the data center. They need to understand the compliance expectations and help the banks to have all the evidences to support that. And it may not be everything because lots of the things bank has to do, but there will be lots of expectations. Like say your performance and monitoring, you need to provide an all kind of mechanism which takes care of or provide a comfort that how you will monitor and give a comfort to the banks that okay, your performance delivery is up to the mark and continue to do the monitoring, right? Security compliance, the third party audit. So so you need to have all the kind of the security compliance reports available, which will you can take it to the REs and tell that okay, I have those controls framework in place. So definitely it will better for these organizations to understand the nuances, expectation, and what RBI or any regulator when they come for the audit and when they ask banks to show me that like all this control requirement from the TCS. Let's say, for example, if I'm just speaking the name because questions is there. Now TCS, you have outsourced now. How you are managing that relation with TCS? Because then you will be expecting lots more things to come from the TCS. So TCS need to look at from that direction and then figure it out that okay, am I able to provide the reasonable assurance to the customer which they can go and take it to the regulators, and regulators will have the comfort that banks able to manage all the risk with respect to outsourcing that services to TCS. So it's very important for them to understand that. Now, agreements are definitely a very critical component for the entire contracts, right? Everything's revolved around that agreement management. So, requirement is to have a very legal binded agreement, right? Which all the kind of the regulations have been defined, all the terms and conditions very clearly, scoping has been defined. Also, it establishes that there is going to be regular monitoring and assessment. What are the performance SLAs and all these things will be there that need to go back into the contract. Right to audit clauses, right to delete the data, and all these things aspects that requirement and all the 16 to 18 pointers has been very clearly laid down that need to be there in agreement. And it could be possible that every agreement, every kind of outsourcing may not be applicable to all the controls which are there. But you need to look at that based on the materiality, non-materiality, criticality, and all these things. And accordingly, rebuild your contract, redefine the contract along with your legal team, and then build it. And then go back and look at that action plan. First, you need to get the legal agreement template done, right? By listing all the requirement which is there. And it can map to, as I was talking about the categories. And then also you need to go back to review that contract, do the gap assessment, see that what are the missing elements, and then maybe do an amendment along with your partner that since the guideline has come, we may need to go for the amendment. I think they will also understand that banks need to comply with the regulations, right? And not only the banks, all the parties, NBFCs and in this whole process, right? And plan for amendment and map the risk, like say in case certain things that you are not able to do that, right, because of the certain limitation at this moment, may go and create a kind of the risk exception mechanism, taking approval from the board and all this thing, because that's also will be critical. So you will have the key outcomes, formal outsourcing contracts, compliant with the expectation of the guidelines for all your partners. Checkpoint, maybe what you can do that you create in a kind of the checklist, list down the agreement requirements which are there in the listed, and then vertically you'll add all the partners who are the services you have outsourced and try to see the yes, no kind of mechanism, the gaps and all this thing. That will be a good handy point for you to give an assurance of the compliance. And then build a tracker that how you're going to amend the contract, because every contract it takes its own sweet time. And even if the amendment, because it could be possible that certain amendment may have the cost implications also. Because certain things you may be demanding to adhere to the compliance, and vendor may not have that kind of arrangement, and you may need to add the additional factors which may have the lead to the cost implications. I'm not saying that every element will be there, but it depending on the case to case, because all are variants, right? Okay. Then risk management. I think risk management is again a major area, which is again a deep focus on team. So requirement is from the controls that organization need to have a very comprehensive risk management framework. Like, and when you say risk management framework, what do you mean by risk management framework? It means that how you're going to assess the risk related to other contracts, be it on the application development, be it on the data center outsourcing, anything. So you need to figure it out. What are the inputs that you will pick it up, which can give you indication that what are the risks are there. So you need to identify the risk indicators first, right? And once you have the risk indicators, then you need to start quantifying into the risk. Once you quantify the risk, it means that you have identified that what could be the impact if things goes wrong, right? Fundamentally, if you look at the risk, it's all about visualization of everything which can go wrong and can have an impact to the organizations, right? Look at your risk indicator, define your risk, and then build your risk mitigation mechanism. Like, because risk identification is not only going to help, risk assessment will give you a clarity that, okay, these risks are there, this can have that impact. RBI's boards, everybody will expect that you have a mitigation mechanism. So you need to define the action plan. So that's where it's a comprehensive risk management framework, and you need to document it. Because how you're going to do that? It could be also guidelines also is that you may link it with the enterprise risk management framework, because most of the REs, especially on the banks and all this, may already have the enterprise level of risk management framework. So you may pick it up from there and define it a proper risk management framework for that your IT team, right? Many of the NBFCs may not have that kind of risk framework, or anybody who is ISO certified on all this may have some kind of the risk management. So pick it up, whatever you have. If not, then you go ahead and rebuild that completely risk management framework. Then perform the risk assessment. So that's building the framework, then do the risk assessment. And very importantly, the element which is linked to the process, that third-party risk assessment. So all the third party that you will have, then go to the risk assessment, build a BCP-DR plan, incident reporting mechanism, monitoring framework, and then build a termination clause with respect to the policy. So these are elements which are there from the requirement. Action plan will be more from the understanding that what are the strategic risks, technology risk, and the procurement risk can be there. And the checkpoint will compliance will be there. So you have documented risk assessment. So if RBI expect you that, okay, show me the risk register. So typically outcome is known as a risk register. So it will ask for the risk register. Have you identified with respect to that particular contract, sees that there are 8 risks, and it may vary high, medium, low, and kind of thing. High, they will expect that if there was high risk, that you have already closed it. Okay, because now that's where they have given you the time, like 1st of October, before that any contract is coming for the renewal, you don't need to comply everything by 1st of October, right? That's what it says that from 1st October, then it's another 6 months that you need to look at to close those gaps. So almost compliance duration comes to 1 year, like April 10th it came, April 10th, 2024, you need to have those closures done. Then cybersecurity incident report, if any incident has been reported, risk acceptance, like for example, in case certain points, high anyway, you would be required to close it, but any risk that you are not able to close it, there is an acceptance mechanism. It has been approved by the management board. Everybody has taken a cognizance of that open risk and understand that, okay, closing may have a much wider implications. We can live with this certain risk, then it's accepted, right? And documented BCP-DR and BCP-DR drill records. So very important that one thing that's specified, that you need to have the BCP-DR from each of the partner, because if in case they go wrong, it will have the implication on your service delivery, your operational capability. So how you are going to link it, your operational resilience with the partner operational resilience. So they say their BCP-DR need to have the kind of the correlations with your own BCP-DR. And then you should also do a DR drill with them, partner, right? So that's very critical. Again, I'll take a pause, and one of the critical element is to build that design control framework. I'll take a pause. And in case if any question or anybody wants to ask any questions, we'll do that. Meanwhile, I'll request my team if they can share the feedback form, because feedback form is always very helpful, guys. It keeps on helping us to continue to improve. So please share your feedback. Akash has already shared in the chat box. And those who provide the feedback, we also go back and reciprocate from our side that we share this deck with them. You will get this deck, which can be handy used if you are in the part responsibility to ensure for the compliance, right? You can refer to this document. So please share your feedback. So as of now, no questions, I'll continue. Now, as a part of the risk management, so one of the things will come that go about building the control framework. So control frameworks, what are the control frameworks? One is the policy, which we spoken multiple of times. So governance structure, outsourcing policy, security policy. For certain things, you may need to go back to your information security policy, which is likely most of the organization will already have. If not, then definitely you need to rebuild, you need to build that information security policy. But with respect to third-party outsourcing, how you're going to handle the data protection, access control, and all these things has to come from the security policy. And it need to have the co-linkage to the outsourcing policy also. So it's not that every policy will work in isolation. It has to work in the conjunction with each other. Then India, the vendor management policy, your compliance policy, or the audit policy. So these are like more on the policy framework. Then risk management, where that how you're going to do that, already defining it, that the risk management process. What are the inputs that you will consider for the risk indicators? What kind of the methodology or the approach that you will have to do the assessment, right? It can't be said that, okay, data theft from the partner is a risk. But how do you assess that? What kind of impact? Maybe quantitative, qualitative, a structure that you will put it, which will tell you that, okay, this is a high risk. Some scoring mechanism, some qualitative mechanism, which will tell you. So those are the things you will require to define, right? And then you identify, assess your risk. So assessment process and the due diligence, how you going to do that? These are like procedures that you need to build into the place. Then monitoring and review mechanism. So you need to define the performance and monitoring matrices. Okay. Set up the data collection process. And this is very important. Right now, you would have defined that entire the performance monitoring for each of this kind of the category of contract. This is the way I will monitor that, which will give the management and assurance, the board and assurance that this contract or this outsourcing services is working fine. Okay, and also is in line with an expectation of the circular. But how are you going to measure that? How are you going to demonstrate that? Because that's where the regulator will come and start asking for the evidences, right? Which can be demonstrated that these are services have been monitored, services are improving or decreasing, or what kind of the things, right? So you need to define that what data that you will collate, maybe the certain logs that you need to collect, maybe certain kind of the report you will require from the third party on the weekly basis, daily basis, monthly. So that's where you need to define the whole process and also build an audit and review framework, because you will be required to go and do an audit of these third parties contracts and all the things. And then last not the least, but another very important, that you will need to build a complete BCP-DR framework. So you need to align the, so most of the, again, banks especially, they will have the BCP-DR. Many of the middle layer of the NBFCs may not have. So you will, those who will not have, they need to go back and refine your BCP. And or if you already have there, then rebuild the BCP, align it with the third party, right? So that's very critical. And go back and also add that those things as a contractual requirement. And in this, one of the very critical component in this circular has come about that building that exit mechanism. It asks that in case if something goes wrong, if you need to exit out, whether the banks or the REs will have the sufficient capability back home that they will be, you will be able to take care of those services. Or if you need to move it to the third party, then what kind of the arrangement or support that you will require from the incumbent partner that will help you. So need to have a very strong guidelines and the SOPs for the exit strategy. Then monitoring and control of outsourced activities. So this is another chapter which is there. So we have look at that in the entire guidelines is following in a cycle, right? Identification to evaluations to that contracting to the control applications, and then monitoring and monitoring and then exit, right? So requirement management structure for defined roles for the monitoring. So there is very clearly expectation that what you are supposed to do, what are the expectations that for each of the roles for the monitoring purpose, and the building the control frameworks, right? And build an audit. And pooled audit mechanism is very interesting concept that they have introduced. The like, for example, any certain partner, any switch provider is providing the services to 4 or 5 banks. then banks may come together and can try to do a single audit, but provided that it doesn't compromise the data security and all these things, right? So that's kind of the arrangement it has specifying, right? Then action plan, you need to create a monitoring and control checklist. What are the things that, like, for example, you may be doing the inspection every quarter, monthly, 6 monthly, or maybe getting done from the third party. What are the things that you need to check, right? Then go and do an assessment with respect to checklist and see where that vendor is standing, right? What are the things that they are following? What are the things that they are not following, which can be an audit point for you, right? And go and do an audit also. So one is that a regular monitoring as a part of the data operation, and there's a very dedicated third-party audits that is asked to do. And the key outcomes, definitely you have a proper control structure that is there, and there is a proper assessment of the ongoing services. What are the audit? RBI will look at it, or any regulator. So they will try to see that we have the audit report or the vendor inspection report for the each of the partner. You have the third party certification wherever possible that you might have engaged with the third party performance review reports that they may be submitting, you may be reviewing, and if you have reviewed, then have a proper minutes of meeting, which can be demonstrated to the regulators that yes, we have reviewed these things. And have an assessment review for the cloud service provider or security operations center. Then you have the exit strategy, where that exit strategy, I've already spoken about the exit strategy, that have a BC plan, that define that exit terms, that what are the scenarios that you may need to exit out. Those are some of the things may already be a part of the contract, right? But you need to have for each of the outsourcing contract, have a clearly defined documentations which linked to the exit, which can go as a part of your entire the BCP process, right? So action plan, there has to be clear exit strategy, termination process, and then termination process, how you're going to handle that termination process or the exit process, right? And the checkpoint, what RBI will continue to look at, they will see that were there any exit report for any kind of the contract which has been moved out or has been terminated, or they will also see that, okay, are there any exit strategy for that particular contract? Is there its documentations? And then BCP and exit approach for critical partners, right? So that's where, again, I'll take a pause. These are like all the domains where that RBI has come out with the guidelines. I try to give, and please note, you may not use it completely as a single point of the source of the truth to apply that. You need to go back, look at your contracts, look at the guidelines in very details. We have tried to put on a summarized view in here, right? So that's where that you need to look at it, apply it, mind, wherever possible, take the third party help and to do that. So I'll take again pause and wait for any questions. Again, feedback form has already been shared. Akash, if you can share it again. Request you to share your feedback. Those who share your feedback will come back with and share this deck with you for your easy reference. Akash, if you can share the link again. Thank you. And if forward, your feedback is always very important for us. So last, I would like to touch upon, as I was talking about that, because of our experience of managing those contracts within the team and good understanding of the regulatory structure, we have been also engaged with some of the banks and the NBFCs to help them to comply. If anyone, if you have any requirement, you can reach out to us. So how do approach that we follow? That there are 4-phase approach that we do is complete profiling of your contracts. Look at what are the services, sit with you, understand, and then try to assess. And then look at your policy framework, whatever form factor that it is there. We'll try to understand through the discussion, through the documentations. Do a proper gap assessment. Before doing the gap assessment, we try to do the mapping with applicability, right? Because certain things may be applicable to certain contracts, certain things may not be applicable to certain contracts, right? And certain things may not be applicable to you as a regulated entities also. So we look at the gaps, identify and build a complete roadmap that, okay, how you can get compliance to these outsourcing guidelines. And then not only that, giving you the roadmap, but also start building the control framework for you, right? So be it on the policy, building the governance structure, policy, processors, everything that we either build it fresh from the scratch, or if you have anything, we rebuild on top of it so that everything aspect is get compliant with respect to guidelines. And not only that, we also work very closely with your respective teams to get this thing going at the ground level, like contracts. So we help your teams to look at that each of the contract, and these are the things that need to be modified. We help you to do the third-party audits to see that third-party adherence is there. Help you to vendor inspection, due diligence, and all these things. So what a point, and we completely also help you to the implementation. And not only that's continued compliance, because it's not a one-time activities, because every contract coming for the renewal need to go through the same process. If the contract is already in place, you need to continue to do the monitoring, you need to define the KPIs, continue to do the assessment, or as well as that when you're going for any new partner, do a proper due diligence in line with the guidelines, right? Conduct the risk assessment, build a mitigation plan, helping into reviewing the contract and providing a guidance from the missing controls which are there from the controls, right? So that's where that we follow the approach from end to end, from start to completely getting ready for the compliance, help you to get compliant and continue to do the assurance. So with this, I'll take a pause, and if any questions or anybody wants to raise your hand and want to have a kind of chat, very happy to pick it up. Maybe any pointers, anybody may have just a simple feedback also, you want to share your experience of building that framework within your organization, happy to, because it may be helpful for others to know that. Meanwhile, again, a request, please share your feedback. It's again very critical to have a feedback. Deepak Malik, do you see any significant impact on these outsourcing guidelines due to introduction of data privacy bill? Yes, undoubtedly. Now we may not have the complete clarity that which form of the bill will come. Now the guidance is already available in the market. But if you look at it very clearly, where it identifies that data which goes to third party for the processing, right, and also to the subcontracting, how the control layer has been built into the whole process, the consent mechanism, and here also that we will be looking at. Now, it will be depend on the contract to contract. Let's say any places where that bank is managing customers' confidential information or the personal information, and those being shared with the third party, right? And third party is into the arrangement to process that. So you will have that kind of the implication of both the guidelines coming together. So one is an act, one is a compliance. You need to look at that both in that contextual arrangement, and then look at that what actually applies, what doesn't apply. But maybe we'll have to wait for the bills to come into act. But yes, pointer is that you may start getting ready for that. But definitely there will be an impact. Any question, guys? Any question? Please share your feedback. Again, we keep on requesting everyone to share your feedback. Is always helpful. Meanwhile, I'm there. So from the I'm here. If anybody has question, any things you want to discuss, again, I told you, you may raise your hand or ask a question. So if not, so we'll take in a permission from you to close the sessions. That's what there. Thank you for your patiently listening out. Hopefully that the session will help you to go back and apply some of the knowledge. Those who want to connect with us, please reach out to us. We are there. We can help into building that process for you to get compliance. So thank you all. Thank you, everybody. Thank you very much. But still, I'm there. If anybody has questions, I'm there to respond. So if not, if there's no any questions, we'll take your permission to close the session. Thank you all. Thank you again.